Good morning, good afternoon, ladies and gentlemen. It looks as though we may have just lost Simon temporarily. I think he is logging on again now.
Hello, everybody. Can you see me, James?
Yes, I can see and hear you, Simon.
That's fantastic news. Well, hello, everybody. I'm terribly sorry about that. It's the perils of working from home, I'm afraid, in the internet age, and the difficulty of getting a solid G5 connection in central London. Anyway, we're here now, and I'm pleased to welcome you to our webinar, which will explain and help you understand the rocketing prices of polyurethane raw materials. This is part of a series of webinars that we're holding over the course of 2021 to highlight some of the key issues ahead of our meeting, which is scheduled for October in Dubai at the Middle East Foam and Polyurethane Expo. I'm Simon Robinson, and I edit Urethanes Technology International magazine. I'm going to be your host for today. But before we get started, there are just a few bits of housekeeping we need to get sorted out. The first thing is that you can listen to this webinar either over your computer or using a telephone. If you want to use your phone, then you need to check the audio joining instructions that were sent with the invitation to this webinar. Now, assuming you can all hear me, and because we all use different platforms for this sort of thing, can you please put your audio, your microphones on to mute for the duration of this? Okay, so I'll be taking questions. We'll be taking questions throughout the presentation, which will take about half an hour, I think James was saying. There will be a question button on your device. Please feel free to press that and then type your question. I'm going to tell you now that short questions have a better chance of being asked than long questions, so please do not write a 500-word essay. If I have to make other people listen to it, then they'll be very sad. I will also group the questions together. That helps us get through things if we get a lot at the end. A couple of other things, despite this being a webinar about price changes and how high the current prices are, we will not be taking any questions at all on the current price of raw materials in the different markets in the moment, or their upstream or downstream components. Or we will not be making any projections for prices in the future. Nor will we talk about market share or allocation or anything else that could be seen to be trying to signal a price change. Okay, so for more information, the webinar is being recorded, and all the registered participants will receive a link to the webinar within a few days of its completion. The webinar will also be posted on utech-polyurethane.com. So, after all that excitement, the reason that we're here, I'd like to welcome James Elliott from IHS Markit, who will give us some of the reasons behind the currently high price of polyurethane raw materials. Thank you, James.
Thank you for that introduction, Simon. Good morning, good afternoon, ladies and gentlemen. My name's James Elliott, and I'm joining you here today from a slightly sunny London. I've been with IHS Markit now for around 7 years. Initially, I've covered a multitude of different inorganic products, including chlor-alkali, PVC, and bleaching chemicals. But for the past 5 years, my main focus has been the isocyanates and the polyurethane feedstocks markets. Initially, these were covered as part of our MDI and TDI world analysis services. But since March 2019, the coverage has focused on our global polyurethane feedstocks market advisory service, which I'll tell you more about shortly. You can see from my title slide that my presentation is entitled "The Polyurethane Feedstocks Pricing Rollercoaster. Does it only go up?" When we think of a roller coaster, it evokes different emotions in all of us, whether that's happiness, excitement, sadness, fear, anxiety, and nausea. And players from the polyurethane industry will have experienced these different emotions over the past year. In this presentation, I'll review the polyurethane feedstocks supply and demand dynamics. I'll explore some of the industry characteristics, and I'll use these to answer the question, do polyurethane does the polyurethane feedstocks pricing roller coaster only go up, or is there a dip somewhere along the way? So why do we need a presentation on the polyurethane feedstocks prices? Well, through 2020, it's really been a roller coaster ride. You can see the prices of the key polyurethane feedstocks in Europe from June 2020. Polymeric MDI was at 1,100 euros per metric ton, an all-time low. TDI we had at 1,400 euros per metric ton, and flexible polyether polyols just over 1,000 euros per metric ton. Within 6 months, the prices increased significantly, almost doubling. So reaching 2,000 euros per metric ton DDP for polymeric MDI, just under 3,000 euros per metric ton for TDI, and just over 2,000 euros per metric ton for flexible polyether polyols. All of these prices are taken from our Global Polyurethane Feedstocks Market Advisory Service and our European monthly contract price assessments for the respective months. However, this price increase doesn't tell the entire story, and we need to provide further context. So let's dive a little deeper into the market dynamics. You can see my agenda for the presentation today. I'm going to begin by giving a little bit of a history of IHS Markit, who we are and what we do. I'll then move on to introduce the polyurethane feedstocks and give a PU 101. I'll define the roller coaster and the characteristics of the industry, and then I'll move on to review the roller coaster of 2020 and the supply and demand, and finalize things by looking at the pricing through 2020 and how we assess prices at IHS Markit. So who are IHS Markit? Who are we? What do we do? IHS Markit is an information powerhouse. We deliver on the promise of the new intelligence. We provide data, analytics, and insight in a number of different industry segments and sectors to help clients make the best choices and stay ahead of the competition. As I said, we're involved in numerous different industries. I'm from our chemicals group, but you can also see from the spheres, we have an energy team, automotive, maritime and trade, and from our market group, we have the financial markets, data and services. So involved in a number of different segments and sectors. Here you can see our chemical product portfolio, information, analytics, and expertise. I'm in our base chemicals group, specifically aromatics and fibers, and that's where we have our coverage of the polyurethane feedstocks. Within base chemicals, we also have our inorganics group, light olefins, heavy olefins, plastics and polymers, and syngas. In base chemicals, we provide pricing, assessment, market analysis in terms of supply, demand, cash costs, margin analysis, and provide price forecasts. And we do this on a short-term basis in our market advisory services and in our on a long-term basis in our world analysis services. We also have our specialty chemical insights, looking at specialty chems, such as downstream in the polyurethane industry, technology and analytics, looking at the process economics of the different chemical processes, competitive costs and margin analytics, so looking at the cost curves of different chemicals. We have our business information and same-day analysis group, and you may have heard of ChemWeek, a similar publication to Urethanes Technology, but looking at the general chemical industry. And then we have our consulting services, performing bespoke consulting projects on numerous different subjects and across different chemicals. So we launched the Global Polyurethane Feedstocks Market Advisory Service in March 2019. It's a strategic, integrated and global service providing accurate price assessment, market intelligence and insight to give a current independent perspective of the polyurethane feedstocks markets. We cover MDI, TDI, propylene oxide and polyether polyols, and we aim not only to tell you what the price is in the market today, but why this price has come about, what's happened in terms of supply and demand, what the costs of production are, what's the margin of the different products. We aim to tell you what the price will be tomorrow, next month, next quarter, next year. So we aim to give you the deep insight behind the market dynamics. Within the service, we publish 4 different reports: our Global Monthly Market Report, which captures the price assessment, the market dynamics in terms of the supply and demand discussion, what's happening in terms of the price forecast, and we also give our outlook within this report in terms of the different products and across different regions. The Global Monthly Supplement is a more data-focused report in which we publish our monthly plant-by-plant operating schedules. We have our Asia Weekly Report, which my colleague Sian Wong, based in Singapore, publishes each week. With the Asian market far more fluid and spot pricing prevalent, it's essential to capture the market dynamics on this quick weekly basis. We also publish periodic special focus articles on interesting subjects. My colleague David Brown, based in the US, covering the US market, is currently in the process of publishing a report on the impact of Winter Storm Uri on the polyurethanes industry in the US. The service includes enterprise-wide access, unlimited downloads, access to our expert consultants, including myself, David Brown, Sian Wong, and Tobias Spira. And some of you may be aware of our service and in regular conversations with us already. And you also get access to our Connect platform where you can download price and economics data, unlimited download, so you can download that data and reports as much as you like. And throughout this presentation, I'll be using data and information which is usually included in our Global Polyurethane Feedstocks Market Advisory Service. So that gives you a little bit of background about who IHS Markit are. Now let's move on to introduce the polyurethane feedstocks with a little Polyurethane Feedstocks 101. So as I stated, we analyze 4 different products within the Global Polyurethane Feedstocks Market Advisory Service. Methylene diphenyl diisocyanate, MDI, typically produced and sold in polymeric MDI, monomeric MDI and high functional MDI. Market size around 7 million metric tons. In green, you can see TDI, toluene diisocyanate, the second largest isocyanate market with a market size of around 2 to 3 million metric tons. We have propylene oxide, the reactive intermediate in the production of polyether polyols. Market size for propylene oxide around 11 million metric tons, and for polyether polyols around 13 million metric tons. Okay, let's take a step back and consider the bigger picture. On this slide, you can see a schematic of the overall polyurethane value chain. Under the orange heading, you can see our base chemical feedstocks, which are essential in the production of the polyurethane feedstocks. So we have our aromatics, our fertilizers, inorganics, olefins, and then acetyls. Our polyurethane feedstocks, as I mentioned, MDI, TDI, PO, and polyols, react in different formulations to produce our polyurethanes, rigid polyurethane foam, flexible polyurethane foam, case, and binders. And these are then used in a myriad of different end-use applications. As many of you will know, polyurethanes are ubiquitous. They're everywhere in our everyday life, and they're essential in our everyday life. The icons representing some of those end uses, such as in appliances, in our furniture, our vehicles, and in our houses via insulation. So we're surrounded by polyurethanes, and they're important in our everyday life. So that gives an introduction to the polyurethane and polyurethane feedstocks. Let's now define the roller coaster ride and the characteristics of the polyurethane feedstocks markets. So firstly, for the polyurethane feedstocks, the first main characteristics I want you to consider is that we have very complex production systems. The production of the polyurethane feedstocks involves the convergence of different base chemical value chains. In our Global Polyurethane Feedstocks Market Advisory Service, we analyze the costs of production for each of the polyurethane feedstocks, for MDI, TDI, PO, and polyols. For MDI, we consider 4 distinct steps in the production process, and these are shown on the slide in the schematic. The first step, the nitration of benzene to produce nitrobenzene. Step 2, the hydrogenation of nitrobenzene to produce aniline. The third step is the production of phosgene, and the fourth step is the phosgenation of aniline to produce our MDI and our byproducts. You can see numerous different chemicals from different parts of the industry going into this complex production process, and there's different levels of integration per plant across the world, and that's something to consider, and that adds to the complexity in the production system. I've included the schematic for TDI, you can see it here, 4 steps considered as well, also a very complex production system. So that's the first characteristic of the polyurethane feedstocks industry that I want you to consider. there are complex production systems. The second characteristic is the feedstock market dynamics and the influence that has on the polyurethane feedstocks. So benzene, toluene, they're the foundations in the production processes for MDI and TDI, and they have an influence on the MDI and TDI market dynamics. Similarly, for the polyols chain, propylene is essential in the production of propylene oxide and thus polyether polyols. So the supply of these key base chemical feedstocks has an influence on the operations and supply on a month-to-month and on a long-term basis for our polyurethane feedstocks. You have to ensure there's sufficient capacity and supply of our base chemical feedstocks to produce our polyurethane feedstocks. Moreover, they have an influence on the pricing of our polyurethane feedstocks. And this is especially the case for propylene oxide, which globally is priced off of propylene, and the change in the monthly contract price for propylene across different regions. Then you have to consider the profitability and the costs of production for the polyurethane feedstocks. The change in benzene and toluene each month has an influence on the cost positions of MDI and TDI. So that's the second characteristic of the industry, the feedstock market dynamics. The third characteristic is the co-product dependence. And I guess this is more applicable to PO than the other polyurethane feedstocks. For propylene oxide, we have 5 different production routes: the chlorohydrin route, the POSM route, PO-TBA, and then the on-purpose routes of direct PO via cumene and HPPO. In the middle column, you can see the oxidation source in the production process, and then finally, you can see the co-product in the final column. So when a new producer enters the propylene oxide market, they have to consider what is happening in these co-product markets and if it makes sense to invest in propylene oxide whilst producing a co-product, or if to invest just in pure direct production of propylene oxide. The co-product markets have a bearing on the operation of our propylene oxide production, whether that's because styrene or TBA markets are well supplied or tight. You'd see the operations on the PO units moderate as a result. Moreover, they also have an influence on the production costs of our propylene oxide units. So if the styrene price is very high and the ethyl benzene prices are low, then we'd see the POSM economics high, and we'd see POSM plants optimize the operations to take advantage of that high margin position. And vice versa applies. If we see low margins across PO, TBA, or the chlorohydrin units, then we'd see a reduction in production. So co-product dependence has a significant bearing on the operations of PO. As many of you will know, polyurethanes are consumed in high growth end uses, and that results in very strong demand growth for our polyurethane feedstocks. I've selected 3 end use segments here: construction, bedding, and appliances, and you can see the annual average growth rates taken from our MDI and TDI world analysis, respectively. So construction at 4.4% for the next 5 years, bedding 5.1%, appliances at 5.3%. And historically, we've seen very strong demand growth across these end uses and for the polyurethane feedstocks in general, above GDP growth. So the fourth characteristic of the industry, strong demand growth into high growth end uses. Okay, characteristic number 5, it's very challenging and difficult to become a polyurethane feedstocks producer. There are some very high barriers which need to be overcome. Firstly, it's very expensive to build either an isocyanate plant, propylene oxide plant. High capital costs are involved. It costs maybe $1 billion at least to build an isocyanate plant, and that can vary depending on the level of integration and how far downstream your facility goes. Second high barrier to entry is the advanced process technology access. It's very challenging to access the technology for MDI, TDI, or propylene oxide. You either have to pay a high fee to license the technology or form some sort of relationship with an existing producer to realize that technology. However, very challenging to produce your own technology and develop your own technology. And it's not something that we've seen too much in the industry. You need efficient feedstocks integration. So as I said, the production processes for MDI, TDI are propylene oxide are complex, and you need to source different feedstocks, whether that means building the feedstock facilities or establishing some kind of over-the-fence relationship. With regards to chlor-alkali, we see a mix across the industry in the relationship with MDI and TDI producers. Some MDI and TDI producers are producers of chlor-alkali, and they consume that chlorine directly in the production process. Others have an over-the-fence relationship where chlorine is moved to the MDI and TDI plants via pipeline, and then the HCl byproduct is returned to the chlor-alkali producers to then market either as hydrochloric acid or perhaps use the oxychlorination process to produce PVC eventually. Now, the polyurethane feedstocks can be considered pseudo specialty chems. They're not quite fully commoditized just yet. For polyols, we have numerous different grades, and when myself and my colleagues conduct our price discovery each month, we hear about these different grades and the pricing evolution month on month across these different grades and have to make an assessment on the pricing each month as a result. You need to understand your end-use market, you need to understand your products, and the final barrier to entry listed on this slide is therefore sales and distribution intelligence. Probably because of the high barriers to entry, we have a limited number of suppliers across the polyurethane feedstocks. For MDI, we have 10 producers across 23 sites, and that gives an annual average plant size of around 400 KT. TDI, 16 different producers across 23 sites as well, average plant size of 150 KT. Propylene oxide and polyols, we have a higher number of producers and far larger number of sites, towards 100 sites for polyether polyols. You can see the average plant size around 230 KT, 100 KT for polyether polyols. But I would caveat that by saying in Europe and North America, we see far fewer players and a similar number of players as to MDI and TDI. It's in China and Asia where the markets are perhaps more fragmented and we see a higher number of players. So similar market dynamics for PI and polyols as to MDI and TDI in Europe and North America. Because of the complex production system and the low number of producers in the industry, when there are production issues, disruptions to supply chains, we get short-term volatility in supply. Now, the stalwarts of the industry among us will recall the period from 2016 to 2018, when we previously had severe tightness in the polyurethane feedstocks markets, mainly the isocyanates. That period from 2016 to 2018, we saw prices increase as a result of the supply tightness, and it was a period of fly-up margins. Now, in this slide, you can see the plant outages for MDI. Each circle represents a single plant outage, and the different colors correspond to different regions. So you can see in Q4 2016, we began to see an increase in the number of outages, and then through 2017, at select different months, we saw a high number of outages. In May, you can see around 11 different facilities down, and that probably represented around half the plants in the isocyanate market, in the MDI market, down around that time. So severe tightness in the short-term market, and that's the final characteristic that I'm listing today in the industry. We get short-term volatility in supply because of these other characteristics which I've already outlined. So let's move on to the next section of the presentation and consider 2020, a roller coaster for all of us for different reasons, but mainly driven by the COVID-19 pandemic. But let's consider the supply and demand dynamics for the isocyanate markets. And you can see I've repeated the charts from the previous slide, but updated this for 2020. And you can see it for MDI, TDI, and polyether polyols. Now, for MDI, through the first half of the year, we had on average around 4 or 5 plant outages per month. In the second half of the year, you can see this increased significantly to around 8 or 9 plant outages per month. So the second half of the year, the market theoretically is tighter because we have more facilities down, and that means less sources for material worldwide. TDI, you can see the number of outages through the first half of the year is actually very similar to the number of outages through the second half of the year. But when you review where these outages occurred in the first half of the year, mainly China, you can see that, and Asia, you can see that there are a few outages in Europe and North America. So in the first half of the year, Europe and North America, Middle East, we had quite consistent supply over this period. However, second half of the year, you can see the number of outages in Europe and North America increases significantly, most facilities down, and that induced the tightness in the market. So severely tight TDI market in the second half of the year, with most facilities down in Europe and North America and the Middle East. However, the most striking aspect of this slide, I think, is the polyether polyols plant outages. Through the first half of the year, we're probably averaging 4 or 5 plants down per month, which is very insignificant if you consider on the previous slide, I mentioned there are around 97 different polyether polyols production facilities globally. However, second half of the year, you can see the sharp increase in the number of plant outages, peaking in October, around 20 plants down during this period, and the bulk of those in North America and Europe. And again, from this, you can infer that the majority of facilities in North America and Europe were down during H2 of 2020. And this is why we had tight supply in North America and in our region of Europe, and also in the Middle East, a lack of supply. And then the sentiment around the industry, the global industry, added to the tightness in Asia too. What did this mean in terms of available capacity and the excess capacity in the market? Well, you can see this now for MDI and TDI on a monthly basis through 2020, with blue representing MDI and green representing TDI. One note from this slide is Q2, the capacity loss in April, May and June stems from reduced rates at MDI and TDI plants in the aftermath of COVID-19 related lockdowns, where we saw a severe contraction in the demand situation. So that's why we have significant capacity loss over these months. However, if you take the year as a whole, we have MDI capacity loss at about 15%, TDI capacity loss, on the other hand, at just over 20%. And in the second half of the year, that was the average capacity loss. So in any market, if you have that kind of percentage of capacity loss in the industry, then you're going to see a tightening in the supply situation. And indeed, that's what transpired in the MDI and TDI markets. And also, we see a similar pattern emerge for polyether polyols. Now let's switch to the demand side and analyze the consumption in 2020. And in this slide, you can see a chart of our composite quarterly demand index, which includes the US, West Europe and China, and uses Q1 2019 as a base. Through 2019, we saw demand gradually increase through the year, the usual seasonality in place. However, Q1 2020, you can see a collapse in the MDI and TDI demand. Q1, this was mainly related to the contraction in China when quarantines were enacted to limit the spread of COVID-19. US, North America, West Europe, business as usual, mainly through Q1. Not too much of a demand loss. However, as we move into Q2, you can see demand largely flat, slight contraction in TDI. And this is because in North America and Europe, we saw the lockdowns enacted and the restrictions in place and the shutdown of industry and a reduction in consumer spending in North America and Europe. So demand flat for that reason, whilst we saw a recovery in China, also helping to keep demand flat in this composite index across Q1 and Q2. In the second half of the year, you can see a sharp upwards correction, and a V-shaped recovery really occurred in the MDI and TDI markets. We saw demand increase significantly as the year progressed, and the V-shaped recovery which occurred surpassed everyone's expectations in the market. So when we were in Q2, I think budgets which were proposed were far lower for the second half of the year than what actually did occur. And as such, we saw and we have seen low inventories across the industry and supply chain disruptions, and in general, dry supply chains. And that's contributed to the shortness in availability and the tight market dynamics. Second half of the year, demand performed far stronger than we were expecting when we were at the depths of the demand situation in the second quarter. And this trend was applicable to most segments for MDI, TDI, and polyols demand. Most of the polyurethane industry exhibited this kind of trend where we saw suffering in Q2, a real contraction, and then strong growth in the second half of the year. We segment demand in the following 4 segments: rigid polyurethane foam, flexible polyurethane foam case, and binders. And then we have these series of sub-segments. For rigid polyurethane foam, we've got construction, appliances, transportation, and others. Flexible polyurethane foam, furniture, bedding, transportation, and others. Case, we have coatings, adhesives, sealants, elastomers. And then binders, we have wood composites and others. So these are the segments that we're analysing on a month-to-month, quarterly basis in our reports for the polyurethane feedstocks. I'm going to talk to you about 4 specific sectors right now and the trend through 2020. So construction activity, we saw plummet in Q2 in Europe, and offtake of MDI into the sector heard down 40 or 50% through Q2. Second half of the year, strong recovery, demand at parity compared to second half of 2019, and in some cases, month on month, up 10, 20% compared to 2019. One interesting point is our economists in IHS Markit, who compile the Purchase Managers Index for the construction segment, have noted 12 successive months of a decline in construction activity for the construction segment, which is in stark contrast to the trend that we see in terms of MDI, polyols, and polyurethane offtake into the construction segment. 2 potential reasons to explain that. Firstly, we see infrastructure and projects which are already underway consuming polyurethane as was initially budgeted. Second reason, we've all been stuck at home. We've all had to undertake DIY projects and improve our households, and that's drawn on either OCF or foam panels or boards, which have helped to improve the energy efficiency in our households and make our homes more comfortable. Appliances, in Q2, we saw a slight reduction, but commercial fridge freezers and appliances purchases were pretty healthy as we were all panic buying. Supermarkets faced higher demand, so they had to buy more fridge freezers to stock up on food. Moreover, if we were panic buying and hoarding food, we needed more fridge freezers to store that food, and I think that boosted purchases. So we didn't see quite the same decline in the appliances industry as other segments. Through the second half of the year, very strong demand in appliances, and that's also applicable to flexible foam going into furniture and bedding. Very strong demand, and this can be related to the cocooning effect. Whilst we've been at home, we've wanted to be comfortable, and so that's boosted the purchases of furniture and bedding. 10-20% up through the second half of the year compared to, say, 80% down in Q2 at the depths of the COVID-19 lockdowns, these initial first wave lockdowns. Finally, onto the automotive segment, and we've seen automotive production through the first quarter quite healthy in Europe. Second quarter, we saw the collapse in 2020. In April 2020, production was at 130,000 units, which is an all-time record low. 2020 production overall, 16.6 million units for the automotive segment, down 5 million units from 2019. And April in particular, I think 2019 production in April, we had at 1.8 million units. So a severe loss in that month. But through the rest of the year, the automotive segment gradually picked up, and we've seen strong demand over Q4 2020 and into Q1 2021. Very strong demand. And that can be related to the low inventories and the just-in-time supply chains, which need to be fulfilled just as the automotive or vehicles or transportation facilities are produced. So very strong offtake through the second half of the year for the PU segment, and that's continued into the early part of this year, despite the challenges and headwinds in the automotive segment. So that concludes a review of the industry characteristics and the supply and demand through 2020. Now let's consider pricing. And I'd like to begin by discussing pricing methodology. I think it's important to highlight our methodology at this juncture, and this is the rigorous process that we go through in assessing the market prices in the global polyurethane feedstock service. The methodology location is included at the bottom of this slide, and this is available to download for everybody in the industry. You don't have to be a subscriber of our services to access our methodology. Anybody can read them, and I implore you to do so because it's essential that you understand how us consultants are conducting our price discovery. So firstly, contract price discovery. Market participants are surveyed to assess relative price changes, absolute price levels, and any other relevant data in determining the market changes in prices. So that could include region-to-region arbitrages, feedstock changes, or upstream market dynamics. So all of those factors taken into account to assess the contract price. Spot prices, market participants are surveyed to determine actual spot price transactions, whether that's market bids, offers, and any other information which is relevant. So this is our methodology or extracts from our methodology. Please feel free to review that to understand how we're assessing prices. And generally speaking, these are the prices in each of the regions that we're discovering for domestic markets. So for the US, we have a monthly contract price across the polyurethane feedstocks, US dollars per metric ton DDP. Europe, monthly contract prices as well, euros per metric ton DDP. Middle East, North Africa, Southeast Asia, we have spot import prices assessed on a US dollars per metric ton CFR basis. And then finally in China, in red, we have the spot market weekly assessment conducted by my colleague Sian Wong in Singapore, prices reported on an RMB per metric ton DDP basis. Of course, there are some exceptions to this, and you can see this in our methodology document as well. So for instance, in China, we have the PO price, CFR import price, which is also important in determining the industry and market pricing. So these are the general prices, but there are exceptions. So here you can see the roller coaster of prices through 2020. The first half of the year, we had a well-supplied market for MDI, TDI, and flexible polyols. In fact, for the 18 months preceding this period, we were in a low price environment, and margins for MDI producers in Europe, at some cases, according to our cash cost and margin analytics in the Global Polyurethane Feedstocks Market Advisory Service, moved into negative positions in certain months. And that's for polymeric MDI. If you take into consideration monomeric MDI, perhaps the overall MDI unit is profitable, but for polymeric MDI, we assess costs as negative at some points over this period. However, June 2020, we reached the nadir in pricing for polymeric MDI, low prices for TDI and flexible polyether polyols. Then in the second half of the year, we moved to a tight market situation. Supply shortened because of the outages in the market. Demand was strong, far stronger than anyone initially expected during the depths of Q2 when we were in initial lockdown periods. And as such, inventories were low, supply chains were disrupted, container availability has been short, freight rates high, and this has also contributed to the tight market dynamics. So we've seen prices increase through the second half of the year, and the roller coaster has gone up. However, most commodities have trended upwards in the second half of the year, and this is because we've seen supply disruptions across different value chains. We've seen strong demand surpassing expectations. Supply chains have been dry, container shipments, shortages. So all of these issues have combined to push commodity prices upwards. And I've shown, here you can see Brent crude, benzene, propylene, just a selection, a few different commodities. In June 2020 to December 2020, you can see increases, Brent up 50% over this period, benzene up 60, 70%, propylene up about 20%. But of course, this isn't the nadir for Brent crude. This time frame is used to compare with the polyurethane feedstocks, but Brent crude, we saw the bottom in, I think, March or April, and significant prices since then, and that's been prevalent through that value chain, through benzene and propylene too. So commodity prices in general have trended upwards in H2 2020. And with regards to the polyurethane feedstocks roller coaster, historically, it has gone up and down. You can see our price index for European prices using January 2015 as a basis. The line across the middle in black representing 1. And you can see for many months, the polyurethane feedstocks have been below this line, including in the 18 months or so prior to the recent run-up in prices. The exception, of course, has been the fly-up prices experienced between 2016 and 2018. You can see the mound there in the middle of the chart for MDI and TDI. But you also notice that in red, flexible polyether polyols historically has been very stable. We haven't seen too much deviation from the price that we had in January 2015. The exception really has been the past 6 months. And again, that is because of the special characteristics that we're seeing in the market and the influence this has had on the supply and demand dynamics specifically for the past 6 months. So the polyurethane feedstocks roller coaster has gone up and it has gone down. In our global polyurethane feedstocks market advisory service, we forecast the prices of the polyurethane feedstocks, and we take supply and demand into account in our short-term forecast. In this slide, I just list some points for consideration. When will there be an improvement in supply chains globally? And by this, I mean improved container availability, lower freight rates, the ability to ship products around the world more easily compared to what we've seen in the past 9 months. Will there be opportunity to replenish inventories? Inventories are low across the different value chains throughout different industries, and we need to see restocking before the market returns to a healthier supply and demand position. Of course, this can't return until we see healthier supply. Currently, we're entering the spring maintenance period for the polyurethane feedstocks where we'll have turnarounds, so maybe that will limit the opportunity for players to rebuild stocks. And of course, we have the uncertainty in the forward demand. We're seeing the vaccine rollout globally, and this should enable the lifting of COVID-19 restrictions. But what kind of world will we return to? How will consumer spending and consumer behavior react? Will our spending pivot away from goods like furniture, bedding, appliances, back towards leisure activities and partying as we did beforehand? I know in the UK, we're due to return to outdoor dining and pub gardens on the 12th of April. And from my experience, I can see that most restaurants and pubs are booked up for places for many months in advance. So it's difficult to get a place. Everybody's desperate to eat out and dine again. How will industrial production react? And this includes automotive production and then, of course, construction activity. How does that play out in the year ahead? And all these factors need to be taken into account when you consider prices in the months and years ahead. So that concludes my presentation. Here I've got the concluding remarks. Firstly, the polyurethane feedstock pricing roller coaster has gone up since June 2020. However, most commodities have trended upwards over this time because of supply chain disruptions, low inventory levels, supply outages, and unexpectedly strong demand. Thirdly, historically, the pricing roller coaster for the polyurethane feedstocks has gone up and has gone down. There's volatility in these markets owing to the characteristics that I've described and outlined and their influence on supply and demand dynamics. And finally, where does the roller coaster go up from here? Well, we project supply to be slightly tight through Q2. Inventories will be low because there's a lack of ample opportunity to restock, and then healthy demand is expected through the next quarter. Thank you very much for listening. I look forward to taking your questions moderated by Simon. Here are my contact details. You can see my email address there. Please feel free to get in contact if you have any further questions about the markets, about the industry, or if you have any questions on our Global Polyurethane Feedstocks Market Advisory Service. So thank you for listening, and over to Simon.
Well, thank you very much indeed, James. That was a really, really interesting conversation to talk about where we are, why we are where we are now. And I think it's answered a long way to answering some of the questions that the audience has. But one of the most popular questions is, are big suppliers cutting capacity to drive up prices, James? Do you think that's a realistic business model for them?
No, I don't think that is the case. What we see is this complex production system, and there's been limitations along the different value chains. So benzene over the past 6 to 9 months has been tight. Chlor-alkali supply, we've seen outages at different chlor-alkali plants. The chlorine supply into the isocyanate production process, it's been tight. We've seen supply chains disrupted, so maybe the shipping of aniline across the world has been limited. And therefore, this has impacted the isocyanate production process. Similarly, propylene has been tight over the past 6 months. Propylene oxide producers may have been limited in their operating rates, and that's limited the availability into the polyether polyols production system as well. So across the chain, across the industry, we've seen supply disruptions, and ultimately that's impacted the operations of the polyurethane feedstocks.
So the next question that people are very interested in is, why do producers have outages at the same time all over the world?
I don't think it's necessarily planned. As I said, a number of these outages are unplanned. So you can't help it. There's no foreseeing when an unplanned outage will occur. And in our service, we forecast the outages and turnarounds for the year ahead, but we don't include unplanned outages because we can't forecast these. We only include planned turnarounds. If you look at planned turnarounds, generally, they are staggered throughout the year across the different regions. Of course, there is some overlap, but you need to consider it's not just the isocyanate plant which is going down. It's the chlor-alkali plant which needs to be turned down. It's the carbon monoxide plant. It's the nitric acid or sulfuric acid supply which needs to be limited or turned down. Maintenances for the isocyanates, polyols, propylene oxide, they can take a month, 2 months. These are complex production systems, and it takes time to restart the plants after that as well. So you do get this overlap because of those reasons, but generally speaking, it doesn't tend to occur. And another consideration is suppliers are planning their outages years in advance, 1 or 2 years in advance, and it's expensive to undertake a maintenance. Delaying a maintenance for whatever reason, it often doesn't make sense because producers have to pay for that, and it hits the capex and the financial position of the company overall. So that's the answer to that one.
I mean, there are things you can't really legislate for. For example, the blizzards in Texas.
Of course.
Immense amounts of disruption across the whole petrochemical supply chain down there. Things like propylene was short, so propylene oxide was short, so that hits us. But also polypropylene short, which means that if you're in the car industry, you're hit because you can't get widgets because there's no polypropylene to make the widgets, and then you're struggling to get foam for seats because the polyols have been disrupted because of it is complicated, isn't it? I think.
Definitely.
So, question to being, what causes outages? I think we've just said that they're very complicated plants. What can we do to, in a world where there are relatively few very large plants, make the supply situation more robust? Have you got any thoughts there?
It's very challenging, but if you're a consumer, I would try to look at your inventory position and the way you moderate inventories throughout the year. You don't know how the supply situation will be in a month or 2 months' time because of these complex production systems and these long, large supply chains. Another thing to consider is using different suppliers around the world to guarantee you will always receive your product, and using different suppliers within a region to guarantee product as well. And then you should be covered throughout the year, and that should guarantee your supply.
So basically, diversify your risk.
Diversify your risk, yes.
If you add a bit more product, then there's so much the better, I guess.
Yeah.
How's this affecting the way that materials are priced? Are they monthly contracts, or are they weekly or 3 monthly? How does that work?
As I mentioned, for Europe, we generally see monthly contract pricing where there is a monthly freely negotiated price, which tends to be based on the supply and demand dynamics. You receive price announcements perhaps from suppliers, and then that's negotiated through the month until a price is agreed for the current month. I think we generally see maybe an examination of how business is conducted. So a shift perhaps to quarterly pricing or annual pricing, a change in the minimum or maximum volume which is procured, and maybe a shift away from spot quantities to contractual quantities. Definitely something that I think all players and suppliers and consumers across the industry are evaluating to guarantee supply and to have, I guess, less fluctuations and volatility in supply and pricing. And that helps consumers and producers plan ahead and budget ahead more effectively.
Sure. I was also wondering, a good question from Emmanuel Legrand here is, do you think the crisis is driving PE recycling projects forward?
Perhaps consumers of PU are looking internally at how they can consume more of their end-use products which are returned to them. That could well be the case, but I think that's maybe a societal change which is being driven anyway. I mean, consumers want recycled products, they want sustainable solutions, and I think that's the main driver for the shift that we're seeing there. And we're seeing great work from most producers along, and industry participants along the different value chains to try and make their products more sustainable, to try and figure out new solutions. A lot of investment going on in this space, and I think the industry will be all the better for it.
It would be interesting to see how much we can eventually generate out of all the mattresses and furniture, for example.
Yeah, of course.
The other question people have been asking is, okay, we're having a great spike in demand for things like beds and sofas because we're all sitting at home, working hard. What's the effect of that going to be long term? Do you think we're just seeing a spike now that we're sort of purchasing in advance?
I think perhaps we are temporarily seeing a big spike. Whilst we're at home, we want to be comfortable, so we probably are buying new sofas. We're finally getting around to that kind of thing. But generally speaking, these are long life products. We have a mattress, I don't know, 8 to 10 years, our sofa, 8 to 10 years. So there's constantly new consumers entering the market looking to buy these products. So I think maybe we are seeing a bump currently because some spending's brought forward or it's been delayed and finally people are getting around to it. But as we move through the year, more people will be coming to buy sofas and bedding. So I think we won't see a massive collapse in demand. There will be this constant purchasing of mattresses and bedding, and that should lead to the drive in PU consumption.
Excellent. I think we've got time for about one or two more questions. Have you got any thoughts about when things like the container shipping problems will sort of start unwinding themselves? Because I think that's something we've not discussed about.
Yeah, that's a real key issue, and I think that's disrupting supply chains globally. I mean, I think if you order certain consumer goods, maybe mattresses, furniture, and if they're being shipped from China, you might have a 3 to 6 month lead time because of the shortage in container shipments. And you see this widely reported in the news for certain companies to bring products into Europe from China. The expense is considerable compared to where it was a year ago. And there is a delay in bringing the material over because of the lack of availability. Generally speaking, the feedback that we're getting from the market is that these issues should start to work through as we progress through Q2. So I think by the end of May, June, there's an expectancy that the situation should be improved. But that's anecdotal and just what we're hearing from the market. And if I rewind, say, 3 months towards the end of 2020, market participants and the industry and different players along different value chains were talking around Q1 for these issues to dissipate. So provisionally, I'd say the situation could improve by the second quarter, end of the second quarter, but who knows? There's a lot of variables at play.
Brilliant. Well, thank you very much for that, James. You're really telling us there's a whole series of knots we have to slowly unpick and unravel before we get ourselves into a nice, smooth, orderly, wouldn't orderly be a nice word to use, orderly supply situation for a lot of our products, and indeed shipping out the things that we make onwards. So that was great, James. Thank you very, very much indeed. I'd like to thank all of you on the audience. We've had a very high number of people here. It's been great that you've spent the time, taken the time to spend that with us. As I said at the beginning, we will be sending you all a link to the presentation, so you can go and dart back through the slides and pour over it at your heart's content for as long as you like. We'll also be hosting this on my website, which is utech-polyurethane.com. And I hope to see you all in Dubai at the Middle East Foam and Polyurethane Expo, which we're organising with our joint venture partners, and in October. So take care. Thank you very, very much indeed. And I'll see you soon. Goodbye.
Thank you. Bye.